that the Fed's at least on the case, whether you agree with that or not. How constructive can you be on days of strength?
Yeah, I think the Fed is on the case. Other central banks are on the case. I think policymakers are just trying to build a firewall between a temporary economic downdraft and any kind of spillover effect into the credit market. So I think comments from Treasury Secretary Mnuchin were, I think, well received. Certainly, I'm glad that they're on that. They recognize that there are going to be some companies, particularly smaller companies, that'll suffer as a result of a near-term business downturn. And as long as that doesn't spill over into the credit markets, I think equity investors should be content to continue holding.
So to hold or to put fresh money to work, or is it more of a situation, Brian, now where if you have the opportunity to reposition, to rotate, then maybe that's your game plan?
Well, yeah, and that's what we're doing on our team. I mean, for the most part, we manage our portfolios according to the client mandates. Oftentimes that means having specified targets of cash, sometimes a little bit of buffer if you can put that to work. When equity markets sell off, we've taken the opportunity to do that. But for the most part, we view it as more an opportunity to rotate more within asset classes as opposed to between them. We still think that treasuries, even though we're 1% on a 10-year treasury, if not lower, that they can still serve as a decent diversifier of the equity risk in your portfolio. During the equity market sell-off, the correlation was around minus 0.4 or so, and that shows that it really has amplified diversification benefits. We think yields could move lower. We're not really making an outright bet on that. I think that the key thing is look for opportunities within the asset classes and not necessarily mess too much with that strategic allocation.